Taking a look now, let's get back to one of the top stories of the day. The big board has been stocks plunging, and they have been all morning. The Dow's still down more than 2%, down about 930 points right now. It was down to 1,100 at the start of the opening bell. And the R word coming back up, fears of a recession looming after disastrous jobs report just released as well for the Biden administration.
Newsmax host Bob Sellers joins us live from Washington with more. Bob, good morning.
Yeah, good morning, Sean and Emma. Yeah, a lot of people worried about a recession. It could be back. Now, the interesting thing, at least to me, is while the Dow gets all the attention, it's down 1,000 points, the NASDAQ was down 1,000 points earlier in the day, and that's almost 3 times, well, certainly twice the percentage on the downside. It was down about 6%, and right now the Dow is down, which is 30 stocks, down about 3%, just under 3%. And as it shows the NASDAQ cratering for, it actually was down about 6%. So anyway, what's going on? Well, recession fears. We know that there are recession fears because we see oil actually going down when there's less activity, less demand for oil. So futures prices go down on that. There's also the concern that the consumer is tapped out, especially for those that make less than $150,000 a year. They are now at a record level debt. And the reason that matters is 70% of our economy is based on consumer spending. So when the consumer can't keep spending, the economy is not going to keep going. And there's a question now is whether the Fed is going to act too late to keep us from going into a recession. Now, a lot of people have been saying you should be lowering interest rates, but we don't expect one until September. However, the markets are telling us maybe it should come now. Now, you can act if you're the Fed between official meetings. You can do it. They could do it today if they really wanted to lower interest rates. But they've wanted to be sure that inflation is coming down. There's another dynamic going on. Also, there really have been a handful of stocks that have driven this market in recent months and years, and those have kind of gotten tapped out, and a lot of money has gone into AI, but the capital expenditure on AI has been big, but revenue coming in has not been big. Profits have not been big. So there's a concern that maybe that was overbought. So we've got a lot of dynamics that are going on, and the crying you hear in New York may not just be from Sean's apartment. It may be from Wall Street as well.
Well said, Bob. You know, I like.
They're not getting sleep either.
No, it's loud.
We're working on Wall Street.
I like how you put that, though. I really do. The folks that are making under $150,000, they are capped out. They are not spending as much. So it's not just about trading or the markets. You point to the spending habits of the everyday American that are, again, inflation's up, wages aren't matching up.
Yeah. I mean, over the long term, a stock should reflect its profits. And that was told to me personally by Peter Lynch. But in the short term, you get these ups and downs, and it doesn't always reflect not only the stocks, it doesn't always reflect the economy, so you get extremes on the upside and extremes on the downside. But what we are definitely seeing is that we have kind of a have and have not economy where those that are doing well are doing really well. Maybe they already have a house. It's going up in value. But if you're somebody trying to buy a house, it's really tough. If you're somebody lower income, just trying to keep up with inflation, it's really tough. So those people are also going to be voting this year. And those are a lot of working class Americans that are having a tough time. Who do you blame it on? Well, you can blame it on a lot of people. Certainly the government isn't helping. Biden has spent trillions of dollars, has driven up M2. I don't want to get too technical, but the money supply, that is the money available in checking accounts and savings accounts, on-demand money, has gone up quite a bit. That started during the pandemic when the government was giving away money, but the Biden administration kept spending money, and that kept the economy going or looking like it was strong for the short term. But to try to keep it going right now, the government's not throwing the money at people as much anymore. So again, you have the haves and the have-nots, and the consumers getting tapped out, especially in lower income.
So the Inflation Reduction Act didn't see much reduction, at least what we're seeing now. Bob Sellers joining us.
Added quite a bit.
Right. Joining us from D.C. Bob, thanks so much. Good